to transition from this to talk about fintech, health, and well-being. I'm personally an avid explorer and also investor in the longevity sector. And bearing in mind the demographics of the world, this is really something that needs to fuse together with the technical aspect of life as well. Now we have the founder and CEO of Fintech for Longevity here. Fintech for Longevity is a unique platform that bridges financial technology and financial inclusion. And what they do is they help banks, insurance companies, VCs, innovation centers, and financial regulators around the world to really be well prepared for the economic opportunities and risks that are related to aging. So here to talk about the relationship between fintech, health, and longevity, please give it up to Dr. Ira Sobel. I wait for the... How do I work? How does it work? Okay. Hi, everyone. Thank you for having me. This is a 15 minutes presentation. I'm going to speak about the relationship between fintech and other domains that are developing at the same time and the convergence of fintech and health tech. Let's start with a quick introduction. I'm the founder and CEO of Fintech for Longevity. We are a research, education, and innovation platform. We help the financial sector to be well prepared for the trend of aging and the future of longevity. These are the focus areas that we help regulators, banks, and fintech entrepreneurs, NGOs around the world. When we speak about financial longevity and the role of fintech in financing a longer life, we talk about retirement and longevity planning, inclusive design and digital accessibility, housing and aging in place. Aging in place is where older people, they prefer today to stay in their homes rather than going to retirement homes. Legacy and end-of-life planning and the role of Web3 in end-of-life planning. Managing chronic illness. Age tech, which is aging technology, and silver tech to build a more inclusive fintech environment. Helping family caregivers with navigating the financial burden of their caregiving roles. But also we look at late life employment and how increasing life expectancy can help people also to work longer and make sure that they have enough savings for the later stages of their life course. So who we serve financial regulators, bank, fintech entrepreneurs, innovation centers, and accelerators who focus on fintech for good, fintech for aging, fintech for longevity. So we help them with defining the right value proposition and working with entrepreneurs to build more inclusive fintech solutions for the aging population. But today's talk is about a research that we've been doing in the past year. We are looking very profoundly on the relationship between health and wealth, more specifically, the relationship between fintech and health tech. On a country level, we can see that people live longer in richer countries. This is something that I'm sure everyone is aware of. So if we look at Japan, for example, GDP per capita or income per capita is very high, and at the same time, life expectancy in Japan is leading among all countries in the world. But if we look at India, for example, where GDP per capita is lower, life expectancy is lower as well. And this is the round circle in the middle. The sizes of the circles are the magnitude of the population. So simply, people live longer in richer countries, And as population age, we're going to see that this is a challenge. What do we mean by population aging? Most babies born today may live past 100 years. So how can people save for retirement? Make sure that they have a well-being, economic well-being in their later stages of the life course. And we see that chronic illness is a derivative of longer life. It's not only about longer life expectancy, it's also about longer healthy life expectancy. However, we need to bridge the gap in funding of long-term care, especially when people live longer. It does not necessarily mean that people live longer and healthier lives. We see a slower deterioration sometimes. So we need to find the right solutions for funding. And healthcare expenditures at the same time is running, but not at the same pace as the increase in the life expectancy. So although countries are investing more in healthcare, and the proportion of healthcare, public healthcare in their total GDP is higher, it doesn't mean that people do not need to provide to themselves and be really responsible for their future. This is a process called individualization of risk. So the welfare states everywhere in the world, even if in Germany, which is a very supportive country, there is a process of individualization of risk. And this is for the sustainability of public debt. So what is the result? The result is that people need to be well prepared for their longevity. When we look at more on a household level, it's the same picture that we saw in the macro level. So people, more affluent people usually have more accessibility to healthcare, and therefore they have higher life expectancy. How can we moderate the relationship between accessibility to healthcare, education, prevention, and higher income? What I want to show today is that in order to moderate the relationship between health and wealth, meaning that not only the affluent will live longer lives, but also those from the lower part of the income ladder, we need to converge between fintech and health tech. And I want you to imagine a world where the doctor will ask you, you were diagnosed with diabetes type 2, and then the doctor will ask you, can you afford it? What is your insurance coverage? Or are you optimizing your medical rights? And what I want to prove today is that fintech and health tech, once working together, can moderate the relationship between health and wealth. At the same time, financial advisors, if they want to help you to finance a longer life and do a very well planning program, they will be needing more information about our personal health. So they will be able to do financial planning, retirement planning, given the personalized attributes, healthcare attributes of people. So the financial advisor today is a very challenging jurisdiction, a very challenging profession, because they need to ask you also about life expectancy, behavioral health. So if they're not well aware of the life expectancy and healthy life expectancy, what they are telling us today and how they are helping us to plan our future is not so accurate. So as I've seen before, doctors will be more involved in our finance, and financial advisors are going to be more involved with our health behaviors. So these are the questions. How can the relationship between health and wealth be moderated? What is the role of technology in moderating this relationship? And how can fintech and health tech be utilized to moderate the relationship between health and wealth? I want to go now to the journey of what we see in health tech in the last 10 years compared to fintech. And as you are all aware of, open banking and PSD2 and the equivalent of open banking and payment and exchange of data in the fintech world. But I want to show you now that in the health tech world, the equivalent patterns, and the standard is called FIRE. But before I explain what FIRE is, we see that in the past 10 or even 20 years, different sectors share similar trends. Digital transformation, both in fintech and health tech, democratization of credit, and democratization of healthcare, aggregation of data, both of our health and our wealth, subscription as a new business models rather than paying AUM or paying for a one-time fee for the doctor. We own and control our data, both our health and wealth data. And the future projections are becoming more easily to us in terms of what will be our cash flow in 2 months from now, or what is the probability of our health condition in a few years. So privacy concerns and REST APIs are interesting. So when we look at the different sectors and similar trends, FIRE is the fast healthcare interoperability resources. Think of it as the open banking of healthcare. And we see an exchange of data putting in one place our health data. And this is very important for retirement planning and decision making for our future. As open banking is expanding around the world, the FHIR standard is expanding at the same time. More and more countries are adopting this new standard. If we look at the past, both started in the beginning of the 80s and 70s. The fintech open banking started in the 1980s in Germany, and the FHIR started in California in a group of people from the healthcare sector. They wanted to understand how our information from different hospitals is similar to our different information from banks can be aggregated together, so for better decision making. So altogether now, we can see that there are new startups that are really trying to tackle the relationship between health and wealth. On the upper side is just banks that are, or fintechs, that are encouraging us to save, and that totally decoupled from our health condition. At the same time, on the right side, lower side of the graph, we see apps that are purely health tech. They're helping us, for example, to monitor our sugar level among people with diabetes type 2. But then on the right side, we see more and more companies that are asking questions about affordability, utilization of rights, probabilities of healthcare events in the future, their duration, but also their costs. So I hope that in the future we will see something that really converges between monitoring our health and helping us with our finances. So these two can be work together. So based on our research in the past year, we we think that these are the 5 trends to watch out for in the relationship between healthcare and fintech, what we call fin health tech. So number 1 is longevity marketplaces. So a bank like the Emirates NBD is really having a marketplace on the website with discounts for people who want to go to the gym, or people who are trying or who want to be tracked in their wearables for better exercises and nutrition. So this is a way of longevity marketplaces. In the future, probably these marketplaces will be more connected through API platforms. Number 2, utilization of rights, like Easy Health, helping us with insurance coverage. What is the optimization of the insurance coverage. And then longevity rewards. So people can reward either themselves or by commercial companies who want to increase the intrinsic motivation of people to do exercise and access good nutrition. So we see here that as people will be, as we have more and more real-time data and accessibility to our electronic health records, we will see more and more real-time cashbacks, real-time rewards on exercises and good nutrition. Number 4 is longevity planning, like Intergen Data. This is a company who can help financial advisors to better understand the likelihood of health events in the future based on personalized health attributes. For example, what is the timing of an onset of chronic illness? What will be the duration of this chronic illness? And what is the cost of it? So then longevity planning is retirement planning, but in a broader sense, that it will also take into account personal health attributes. Another interesting trend that we see is buy now, pay later for healthcare, point of sale financing for people who need credit on the spot for healthcare procedures. So hospitals in the future, by using APIs and other fintechs, will help people to afford the healthcare procedures that they will need. So these are the 5 trends to watch out in health tech: longevity, marketplaces, utilization of rights of insurance and social security, longevity rewards based on real-time behavioral health, longevity planning, which is broader than retirement planning, and buy now, pay later for healthcare. So when we speak about longevity financing, we can group these companies into 3 areas: longevity financing, longevity planning, and longevity monitoring. And for that, we need, on one hand, a very developed fintech and payment domain, but also more data on our health, anonymized, of course, very accessible electronic health records, so people will always be up to date on their health. And a result of that, take the right decision about financial planning, utilization of rights, healthcare financing, and improving their well-being both on the health and the wealth domains. I don't have so much time, so I just want to say, so if you're interested to learn more, in the beginning of November, we open our new education program. We call it Financial Longevity Leadership Program, together with regulators and banks and insurance companies and VCs from all over the world who want to better understand the opportunity in fin health tech. We are also, I want to announce about the first LongeviTech TLV in Tel Aviv in Israel in February 2023. We invite you to participate in a first LongeviTech Summit, where we want to build an international ecosystem of people from different experiences and professions to get together and understand what are the implications of longevity and aging population, especially for the financial sector. You are invited to send an email, register to our newsletters, and soon we will publish a white paper on FinHealth Tech, so you're invited to register to our content. Thank you very much, and if you have questions, I'm here later on. Thank you.
Thank you very much, Dr. Ira. And you're going to stay on stage because we're now going to have a panel, and we're going to look at financial innovation for the future of aging and longevity. Because regardless what age we are at the moment or where we live in the world, longevity and health has an implication on all of us. And therefore, we're living longer now due to technology and health and so much others. And the pressure to really finance late life is now increasing. So let's look at what is being done in this sector. Dr. Ira is one of the panelists. I'd also like to welcome up on stage our moderator for this panel, Alexandra Topalayan, who is a moderator for GITEX and also co-host of the podcast. So welcome up on stage.
Missing Alexander. We have one speaker that is still not here with us, but we will manage, absolutely. Hi, how are you? Good? He's 2 minutes away. Okay. He's 2 minutes away. Sorry? No, let's wait for him. Yeah. Ladies and gentlemen, our speaker is just 2 minutes away. Thank you for your patience. How are you? Good.
I don't know if it's 2 minutes. Actually, you can begin the conversation.
Did he say? Ah. We're waiting for.
I think he's here.
He's not here, no. But, I mean, he's on text with him, so. What?
I'm here.
I'm here. He's not here. He's in the wrong, maybe he's in the wrong space. Wrong stage. Tell him it's called the Summit.
We spoke on the stage.
Oh, you spoke on this stage with him. Is it possible to, yeah, it's better? Better now?
There is.
Oh, there he is. Alex, welcome. Everyone, let us hear for Alex who made it. Hi, nice to meet you. Okay, ladies and gentlemen, welcome to this panel discussion on financial innovation, longevity, and aging. Earlier, we heard from Dr. Ira Sobel, who gave us a brief introduction on the topic. And although it's not a topic that we generally like to talk about, aging is a reality, and so we must address it. So, because we are living longer, the pressures to finance late life living are becoming more and more crucial, and we need to service this aging population. So please let me introduce our panelists for today. We have next to me Mr. Nizam Uddin, Chief Strategy Officer at Algebra. Hello, Nizam. How are you?
Well, good, thank you. How are you?
Good. Dr. Ira Sobel, CEO of Fintech for Longevity. Hello.
Hi, Alexandra.
Can we have another microphone, please, if you have one? For Mr. Alexander Hezekias, co-founder and CEO of eCube.
Thank you. Pleasure.
Hello.
to be here.
So if you can please take a few minutes to just briefly describe your role and how it associates with aging and longevity and so on. Go ahead. Nizam.
Sure, I'll begin. Hi, everyone. My name's Nizam, Chief Strategy Officer at Algebra. Algebra is a digital banking proposition in the UK, which is very much premised on ethics, sustainability, and helping people connect their values to their finances. From a longevity perspective, I would say we are a hugely community-focused entity. We also happen to be Sharia compliant. And one of the segments that we are very interested in is generally the underserved. And so two things I would say that myself and Ira have worked on is understanding deeply segments of groups that are massively underserved and uncatered for by the world of financial services, and therefore they're not making the most of it. And so what I would say in the context of this conversation, we are interested in two things. One, engaging early on with consumers to future-proof the longevity. Those same communities also have deep intergenerational connectivity.
Yes.
And so when you do community outreach and you work with, say, the younger generation, you default also engage with the older generation.
Yeah.
And you can't do one without the other.
Sure.
And so by virtue of that level of community-first engagement, we de facto have a strong impact on the longevity agenda. So I'll stop there.
Okay. Dr. Ira. Oh, microphone, maybe.
I'm the founder and CEO of Fintech for
We cannot
Longevity. We focus on
Okay. I
research,
don't hear.
innovation, and education,
Ah.
especially for the financial sector. We work with banks, financial regulators, fintech entrepreneurs who want to cater to the old generation, or alternatively, they want to help the younger generations to save and be well prepared for longevity.
My name is Alexander Hezekias, and I'm the co-founder and CEO of Eco Financial Technologies. And we work on digital peer-to-peer lending and saving circles. We're based out of Ethiopia, and our sole intention is to have an inclusive platform where we can cater to the marginalized groups of people who cannot be serviced by the formal financial institutions. Thank you for having us.
Okay. Thank you, Alexa. In different parts of the world, there are different ways to finance late life. And you had brought up something about the tontines and rotational saving and credit associations. Can you tell us about how these tools can help?
Yes. So traditionally, ICU is a social system or a social solution to finance, whereby the older generation actually come together and contribute a certain amount of money, every interval to later have the pool of money that's saved given to the person who won the lottery pot. So uh, they are using this system currently, and it's the most prominent tool of financial institution that exists in Ethiopia. And this tool, which is the Rotational Savings and Credit Associations, is familiar all throughout Africa, and it goes by different names across the continent. And I have actually spoken to different people that told me the same institution exists in Pakistan and Iran and different places. So it's definitely an important tool for aging for the aging population that has relied on this service for quite some time.
That's really interesting. So everybody contributes a certain amount of money to the pot, and then it's a lottery system where one person wins it.
That's
Right.
correct.
And I'm assuming it's mostly the older generation that's participating in this system.
So we've seen more young population being engaged as of recent times, but the older generation have been relying on this system for quite some time. But by having to digitize this traditional system, we're hoping to have a lot of young people use
Okay.
ICUB as well. So yeah,
So this system is being digitized.
yes, that's our sole intention. Yeah.
Fantastic. Wow, that's great. Um, Dr. Ira, how can fintechs have a role, and how can they disrupt the current pension systems that we have? What opportunities are there for fintechs in aging?
So I think what Alexander just described is very interesting. Is a way for groups to manage their own longevity risk. So, and once we have these platforms, these fintech platforms, it helps with control of who wins the lottery. Or, for example, in what is called today modern tontines. So the winner takes it all. Everyone puts money in the pot, but then when the last one who survives receives the whole pot. So this is a very interesting way for fintech uh, to see what are the rules of a pension fund and copy it into the private sphere. So this is only one example, and I think we're going to see more and more tools like this that will help people to manage their longevity risk. What does it mean to manage their longevity risk? They will use the power of community for them to find ways to finance their longer life. Because as I said before, there's a process of individualization of risk. We can't rely anymore on the government. We can't rely anymore only on the family. So now the power of community comes in. Another tool which I think is very important for family caregivers that fintech can help is navigation of everything to do with managing and monitoring the finances of the loved ones. So we see intergenerational mortgages. We can see more and more apps that help family caregivers with taking care of all the finances of their loved ones. So these are a growing community. In the US alone, there are 45 million family caregivers that take care of their parents, and they have a lot of challenges with employment, etc. But these apps can help a lot to help them really not only about the saving a lot of things, but also with their role is becoming more efficient.
Right. And what about in terms of the amount that is contributed to the pots? Does that differ from one person to another? Or?
Yes. So basically, people can contribute based on how much they earn on a
Okay.
monthly basis, bi-weekly basis, and it's different from different groups.
Yes.
So what we want to do is curate the type of food groups that around or nearby, and have people kind of choose. And this is kind of a very democratic and democratic approach to what exists traditionally.
Wow. Nizam, seeing that you work with faith-based, how should fintechs explore encouraging savings for communities that have faith-based needs?
Sure. So I think what's interesting is actually the Rosca model is also happening in Europe. So I
Okay.
think diaspora communities who historically have been disconnected from the world of financial services always find a way to engage.
Right.
And so you have the same communities, they call it community, they call it Rosca, they call it loads of different things. So I think this is a phenomenon that's happening in a lot of places, which speaks to a wider issue of people feeling disconnected from the system.
Yeah.
And I think what I would say is, when you think about those who are older, those who are, in terms of longevity, which is like a, lovely inclusive way of saying people who are, older. So the segment of older cuts across horizontally, but then vertically you have lots of different groups. And I think what fintech has enabled is over the last, I would say, 5-10 years, we've had an enabling environment on the regulatory side, on the technology side. And what you now have is segments of groups, including faith-based individuals and consumers, who now can engage with the financial system in a much broader way. And I think that's an important point, because I don't think it's just one point of engagement, i.e. longevity. It's points of engagement from a whole self. And that whole self, so I think last year we conducted a piece of research where we met with MasterCard as Algebra, which was called Values and Lifestyle-Based Banking, which is how do we serve community groups that are historically underserved, from people with disabilities to people with faith-based needs to people with conscious consumer needs. So, they want to basically be able to say, my money will not impact climate change.
Mm-hmm.
These things are all connected.
Yeah.
And I think we've moved into a direction now where, from an algebra perspective, we happen to be Sharia compliant, which means a lot of the consumers that feel like they couldn't engage with the financial system in the UK will now be able to say, okay, this is great. We can now come in, engage at a much earlier point, and then look to, as we roll out our products, we will be able to then roll out products later down the people's life's journeys. The other thing I would say that we're also doing is financial well-being and financial literacy. There was a piece of research that came out just this week around pensions. You talked about pensions. Now people, because of the cost of living crisis in Europe and all over the world, people are more vulnerable to being in some way scammed. And so there's a really sophisticated scam which says, do you want to make more money from your pension pots? All you have to do X, Y, Z. Now, the importance, so again, there are different points of engagement where you have consumer groups who historically have not been able to engage, faith-based and otherwise. They now can engage. And what we have to be able to do is understand that it's not simply going to be a longevity question, right? It's going to be a question around, okay, this individual has a need from a Sharia perspective. We are engaging with them on the community side. We are doing offline work with them because we know digitally, actually, they might not be able to connect close either. So I think there are multiple dimensions to how we do this.
Can you give us an example of some Sharia compliant needs that they would have that differ from other
Sure. I
needs?
mean, pensions are one, right? So ultimately, from a Sharia perspective, what we can go into the technical side or the philosophical side, which is your money shall not be borrowed, lent, exposed to anything that does social harm.
Okay.
So from a pensions perspective, it's things like defense industries, things like fossil fuels, things like tobacco. These are the things that you cannot engage in with your money.
Yes.
And if you do, technically, it's not Sharia compliant. And so it's very ESG and green friendly. And so what I don't want to do is segment a group in a separate way, which will exclusively other them anyway.
Yes.
Rather, it's a much more inclusive approach. And so I think when we talk about longevity, it's part of a much bigger move of financial services to lifestyle and values versus, old people there, we
Yes.
have to engage them. No,
That's true.
there's a move for the entire sector to move in that direction. And we've got to start early.
Yes.
And that includes faith, includes disability, includes loads of other different points of needs.
Yes, yes. And
That's the
values
message.
play a big role.
Yeah,
in
values,
that.
exactly right. And that's the message. I don't want this to be old people, let's box them up here
Yeah, no,
and
absolutely.
engage them separately. I don't think that's
Right.
going to be helpful.
Very true. What are some of the difficulties that the old age population has when using fintech?
We call sometimes the aging population the new unbanked. because the new unbanked or the
Okay.
new underserved. And this is because they had accessibility to their financial data before, but now, as of the digital transformation and so many branches were closed, so we need to find new tools to help them. So we call them sometimes the new unbanked. They have the affordability to own a bank account, most of them, but then they feel difficulties with accessing their data.
Yes.
So these are the difficulties, but we see that during the COVID, many of the old population were forced to use technology. It started with social engagement like WhatsApp and Zoom, and then there's a huge increase in the huge usage of digital
banking?
tools of
Yeah.
older people. So this is good news. However, we always need to remember that the old population is a very heterogenic population. So we need to find really the right indicators. Who are the older adults? And also the age range is very, very broad. So when we speak about the older generation, usually starting from 65. So imagine it's, let's say, from 65 to 85.
Yeah.
Imagine we took the population of 35 to 55 and speak about them as a population. No, we need to really understand who are the old population and use data and big data to understand exactly in terms of financial literacy, digital literacy, education, economic standing, and only then find the ways to cater to each one of these subgroups.
Yes, definitely the pandemic accelerated things. But what do you think, Alex, the financial institutions can do to make it more user-friendly for this population?
So I agree with what Doctor said, and a lot of the technology challenges that come from the fintech side is tech adoption, and the adoption can be mitigated based on, for example, having a user-friendly platform,
Yeah.
or creating different language options and creating more user-engaging ways of displaying those tools. So I believe, like you said, the baby boomers are very unbanked in this generation of.
Yes, absolutely.
and-
My 75-year-old father, I mean, I had to teach him how to look at his bank account online when he couldn't go to the bank. So that is very much a group that doesn't have the skills. It's the skill set.
Yes, definitely. And as a fintech platform, we will have to at least provide some sort of trainings or support helplines and kind of make it better and easier to use, I guess.
Yeah, go ahead.
Yeah.
Sam.
I was just going to say, I think there are some fundamental principles here. One, which is if you're going to serve this particular segment at the point of design, you need to be talking to them. It sounds so simple, but there are so many of us who are, when you're busy building a startup or a company, you're caught up in building, raising, everything else. But actually having that group with their lived experience early on, engaging them, understanding them, testing the platform, making sure it's working, it's not working, improving. These are some of the most easiest things that could be done. And another thing is actually realizing that this particular segment will require, even in a digital world, offline connectivity and offline handholding.
Yes.
So how do you combine that hybrid model of here's a digital platform that actually to get you on there, like you did with your father, I'm going to have to hold your hand, provide some training, do it in the community, and then train the trainer and allow mass adoption. Yeah.
Exactly. Go ahead.
Yeah, I want to add something. We call it inclusive fintech or inclusive design. So it's not it's not about designing a specific or separate fintech for all the people. When we talk about inclusive design, is if you design it for everyone, you need to make sure that everyone can use it. And here I think it's a call for regulators to make sure that in every new app, there will be taken into account also people with disabilities, old age people, because otherwise we don't want to exclude them by building separate apps for them. So when we talk about inclusive design, I can give an example of a paper I wrote together with a colleague of mine. We took the two most popular payment apps, which every one of us uses, and we said, okay, let's now figure out what really could be even slight changes to these two apps to help older people with using it. And one of the highest barrier or the biggest barrier for them is onboarding. So there's a lot to do, especially in onboarding for these apps, not necessarily using. So this is like the barrier that we have to work on.
So when we are planning for our retirement, and what are some of the best practices that we can find today from financial institutions or from government that you've noticed?
So I think there are some activities going on in the crypto world as well, where it kind of seems like a scheme where some people are benefiting more than others, but there's different ways of using the pension funds and having them invested in a very smart way. Even at an early life, we can set up our lives in a way where we can generate income off of the income we've earned previously. So I think if we can give good financial education on using those tools in order to add value to or interest on the previous money that was accrued, and that I think would bring about a great or better life at a later age.
So financial education, another best practice.
I know it's not a popular opinion, but I think financial education is outdated. We need people to press the button. It has to be as much as embedded as it can. For example, we need, I think, to connect between consumption and savings. So every time we go and we buy something with our credit card or with our debit card, a very small portion of it will be transferred either to our pension or to our saving pots for the future. For this, we don't need financial education. Mm-hmm. We just need to understand that we need to invest for the future. So I think that connecting between consumption and saving is very, very important, starting really from very young ages.
Okay.
So I'll give one from finance and fintech and name check a lovely organization in the UK called Sibstar, which was founded to help with individuals with dementia, often older. And the reason why they're great, the good practice there is they work with a national charity focused on that particular group. Why is that relevant? By partnering up with them, one of the issues that we're all having to bridge is trust.
Yes.
There is a lack of trust in the financial system for obvious reasons because of what's happened over the last 15, 20 years. And so all of us have a responsibility to bridge that trust. And so when you work with an organization that already has that trust with said group, that's powerful. So I think that's very important. And from a separate world, in the world I used to work before fintech, I think one of the ways in which we could actually look at this way, which maybe we could do, it just came to my mind, which is actually how do you connect intergenerationally between young people and older people practically? So if onboarding is a problem, how do we help, because generally speaking, digital natives are younger, right? Because that's who grew up with the tech. And especially with the communities that we're working with, often they are intergenerational. Actually, COVID negatively in Europe certainly affected communities from minority backgrounds. Why? They often lived at home with multi-generational homes, right? That's a negative thing in the context of an invisible disease, a positive thing in the context of, therefore, there's close proximity between said communities. And so if you have the younger generation be incentivized in some way, shape, or form to help onboard the older generation, really practically, again, you have a trust between the communities. Even the Rosca models in the UK, actually, the younger generations of communities often from Commonwealth diaspora, South Asian, African communities, it's the younger ones that are saying to their elders, look, come on board this digital version, because it's more transparent. Because right now there's no record, there's no ledger that you've given money into the Rosca. Like,
Yeah.
it's all based on trust, of course, but we
But-
want to digitize it.
But can you give an example of an incentive that the younger generation could be given?
Give them money.
Give them money.
I'll give you £10 more if you onboard another customer, i.e., your grandparent.
Okay.
I think a good incentive is credits for university. So then, between the university and the community, so helping older adults by asking students to help them with onboarding, invest time with older people, helping them with their loneliness, and then at the same time be rewarded for that, either through paying them cash or with credits for university. So I think there are a lot of ideas of how to build this, because we need all the ecosystem to work together. Universities and municipalities, older people, communities. This is the only way to tackle these challenges.
Dr. Ira, that's a fantastic idea. Did you just come up with this yourself, the university incentive? It's fantastic and forward thinking at the same time. Dr. Ira, you spoke of longevity cities. What are they? Can you give us an example of some?
So there's no one definition for longevity city, but I can tell that there's a change in what we think about longevity cities. In the past, according to the UN, longevity cities were the cities where people had the highest life expectancy.
Okay.
So then it was a retrospective research. Researchers went to these people and asked, okay, you are 100 years old, or taking a group of sanitarians and say, how did you come to this age? What did you eat? What was your behaviors? What did you do? Etc. So it was asking people about how they succeeded in reaching this age. Now there's a change in the paradigm. It's not anymore about cities where the average life expectancy is the highest. However, it's cities where we can help people age, so then they will experience or benefit from higher life expectancy. And in China, there are longevity cities, but this is according to the former definition. But now we are looking at longevity cities as something that is between smart cities, accessibility to good nutrition, a lot of parks, a lot of places, community or public places for exercises. This is the new definition of longevity cities. So it's only in the future where we can see if it really succeeded.
Just to add on what Doctor said, there is a strong links between fintech and longevity as well, because fintech has a pour-over effect on health and how you take care of yourself. So basically, there was an example that we had discussed last time previously about those centenarian cities or countries that have very high frequency of large age population or like older population. So speaking of that, like we have to ask the question of, okay, what are they eating, or how are they taking care of themselves, but how are they financing the late life is also a strong question. So those linkages, I'm sure Doctor has already done a lot of research on this, but as a fintech and as an ESG, we have to do better in that regard.
Nothing fintech related. I happen to sit on a board in London, which is London's inclusion board for the Mayor of London. And an interesting thing happened during COVID, where there was a question asked to the board, how do we make London's transport more inclusive? And every group that was on the table came around and said, this is how we do it. And it was interesting, the people representing elderly Londoners, they came up with something which, honest to God, I had never thought about. They were like, we need more toilets on the public transport because actually we need to use the bathroom.
Can I say something about London transport? Is this the time?
No, hold on. If it's good, yes.
It's good, yeah.
Okay, go on.
No, I want to say something about the FCA, the UK regulator. I think that London or the UK is cashless, right? And it turns out that there are a few communities, also older people, who really want to use cash. So now they're asking themselves, didn't we go far too much about cashless society? And we see now that no, there are a lot of ATMs, more and more. And there's a group called Link. So to make sure that ATMs are not too much far from one another, so then people can access cash. So they're asking themselves today in the UK regulator, the FCA, is cashless society, is it equal for everyone? So now they're looking into different communities, and there are really a few who really want to continue using cash. And this should be more accessible.
Do you find this to be true for your region?
I think this question is very unfamiliar because there's not a lot of research to base this assumption. There's not a lot of secondary data that you can find on longevity in that continent, in the continent of Africa in general, not just even specifically about Ethiopia, but in the continent at large, you cannot find this kind of data. But a lot has to be done in that regard. That's what I mentioned earlier, is longevity and fintech and the linkages between have to be researched. So yeah.
Dr. Uri, you had brought up a concept of aging in place.
It's not my concept.
Okay, well, it was
widely used.
Yes. So what can fintechs do to allow the elderly population to age in place, to age in their homes rather than being placed in senior citizens' homes like most elderly in North America, I would say?
So I think that long-term care is limited in terms of fintech usage. And because people want to age in place, sometimes even die in their homes. So I think fintech really needs to help people with utilization of rights, insurance rights, long-term care, help with out-of-pocket expenses. Managing this takes a lot of time, and there are a lot of expertise to be taken into account. I think fintech here could be a very interesting platform, not just one product, a basket of products, or putting together a few stakeholders so can people really feel that they can manage everything from their homes.
Nizam, in your
This is a difficult question. There's no really answers for everything.
It is. Aging in place for
Sure.
on a Sharia compliant.
I mean, I think this is. I think Sharia compliance versus the general answer is probably the same. I think, interestingly, we have probably two sets of generations. We have a generation that was boomer, pre-millennial, who did not grow up being a digital native. So how do we cater for them right now? How does fintech cater for that community, knowing fully well? And then how does fintech future-proof the next generation coming through? And I think those are two different segments that need to be thought through. Right now, right here, I do think we have to be really practical. So I think the point maybe that I didn't make earlier is I think fintech is not operating in a silo. So I think we have absolutely products that need to be made, insurance. We need to make it easier. We need to connect products. But then equally, if people are not if they're not digitally active or able to use digital provisions, then their entire thing that we're doing doesn't make any sense, right?
Absolutely.
And so how do you make sure you have that connectivity? I'll give you an example. A friend of mine, we had this conversation, and so what they do in their local area is they have digital mentors. So the local library is a place where it's incredible. It's in the St. Albans area in the UK. They have a physical library which the elderly still use. So now what they've done through support from the local council is people volunteer. They are known as digital mentors. They are physically standing. And then this person comes and says, because I think what's really funny is on this end, we're all trying to be super techie and trying to be helpful. And so we send a text, hey, you have this issue. And they're like, I don't know, there's a link on this text. What do I do? Where do I go with it? So then actually it causes problems. I think sometimes you're not helping the
Exactly.
community that you're going for, you're actually causing further anxiety.
Yes.
And so therefore we have to think about the impact of the current group and think about ways in which we can create an ecosystem
Yes.
to facilitate aging in place. And that requires offline connectivity. I'll stop there because I'm conscious of time.
That's fine. We're almost out of time, but we do have 4 minutes to take some questions from the audience. If anyone has a question or would like to share their experience on the topic of aging and longevity and financial innovation.
Everything's
Anyone?
clear about aging and longevity.
Sorry?
Everything's clear about
Everything is crystal clear? Yes, right over here. Oh, thank you.
Thank you. From a governance or securities perspective, is there issues, not so much in the UK, they're pretty easygoing on a lot of these, but in the other countries, Ethiopia, across Africa, is there any issues with security exchange or the SEC, however you guys are operating on the fintech side to implement your products? Are you finding that you're getting pushback or governments or banks are very well open to your products?
That's actually a great question because recently we have major developments with regards to the SEC and how securities are exchanged. But in the past, it's been very difficult on the regulatory side of things. And but now I think we're getting different lobby efforts coming from the private and public stakeholders. So in the coming years, I believe it's going to be much more easier and more convenient. And I don't know if you have heard about the news where the government is inviting financial institutions to take part in the Ethiopian local banking system. So there are great efforts that are very optimistic, but we have to wait and see.
Thank you very much, the panel. Oh, was there another question?
No, it's a follow-up. It's okay. Thank you.
Thank you.
So much, Alexandra, and thank you to the panel. It is truly relevant talking about longevity. What about longevity cities as smart cities and so forth that can really, encapsulate everything we need when it comes to health, because health is wealth. We come to the last panel of today, and we're going to go back into the score of finance. We're going to hear from investors and entrepreneurs who will be analyzing